So, based on what just happened over the past few weeks, should you just completely liquidate all your growth and get all in on value? Should you rotate your portfolio immediately to avoid further losses? Well, let me answer that with a simple story. Let's say that you want a tracksuit. Let's say an Adidas tracksuit or a sweater. Let's just use a sweater. I think it's simpler. And that sweater is $100. And you drive to the store, and somehow by the time you get to the store, that sweater is now on sale. And now you can buy it for $50. Would you now have second thoughts about it and just say, well, I'm not really sure I want that sweater at 50 just because the price dropped? I mean, you're going to pay $50, get out of there and say, thank you, Lord Jesus. I can get the sweater for $50 less than what I intended to pay. Thank you. Or let me give another example. Let's say that you buy the sweater for 100. There's no discounts. You buy the sweater at 100, you get home, you go to sleep, wake up the next morning, you find out the entire store has gone on sale. And that sweater you just paid 100 for is now selling for $50. Now, would you immediately go on eBay and try to sell your sweater for $50 because you don't want to hold on to that sweater because now it's $50? Oh my God, I have to panic sell my sweater right now because it's just $50. Or we'll just wear it, enjoy it, and say, well, that sucks, but I mean, I guess it is what it is, but I'm still going to enjoy my sweater. It's still the same amount of sweater. It's the same story with stocks. With stocks, what you get is, incremental ownership in companies, in businesses, in tangible and intangible property. And the fact is that the willingness of certain people to pay a certain price for a partial ownership of that in any single day or week or month doesn't really take away from the business. It means most likely nothing for the business. So I think you have to have that mindset before you make a decision on whether you want to buy, sell, or hold a certain stock or a certain category of stocks like growth. Now, what just happened with the Fed is very interesting. When the Fed came out, as I predicted, and announced, hey, the interest rates will be raised higher than what we initially told you, everybody panic sold. The entire market, even Bitcoin, even like cryptocurrency, value stock, everybody just sold off everything. It was a stampede out of everything. Everybody's going cash heavy. And the question is, in this situation, with everything bottoming out, is this now a good time to sell and rotate? Well, I'm going to answer you with a simple calculation. Now, whenever you have this massive panic sell-off like we had over the past few weeks, you have to slow the F down. Basically, you have to play it like a professional athlete. If you go to a game as a baseball player or as a basketball player or in the MMA business, whatever, and you just completely berserked and you're going to Jose Aldo yourself out of a match, pretty much. Shout out to the MMA community. But basically, you have to slow things down. Otherwise, you're going to panic your way into a really bad situation. And if we're talking about businesses, let's understand what happened over the past few weeks, that the value of any of these businesses you're holding on to has changed. Now, obviously, we all know the Federal Reserve basically put out their minutes, and in the minutes they indicated they're going to raise interest rates much higher than originally expected. Of course, they didn't specifically say a number, but that alone was enough for everybody to panic sell the entire market. Now, the question is, at this point, is not whether you should sell, because it's quite simple to see that this is a panic sell and there's going to be a correction back. The question is, should you buy more? Now, at this point, if you're interested in growth, basically tech companies with a lot of upside, should you buy now because everything just panic sold like crazy? Well, not necessarily, because we might be in a very crazy situation where we're sitting around September, October, and we might be tempted to pull the trigger too soon and miss out on the Christmas sales. Because right now we can get probably a sale, right before Black Friday, whatever. But if we have patience, we know that in December, the Christmas sales are going to come on, and it's going to be way more lucrative to buy the same amount of businesses. So while it's clear to me see that this whole thing was a panic sale, and this is, at least for me, not a good time to liquidate any positions because everything got oversold like crazy, it's also not the best time to get in on stocks I'm actually excited about, except for a few that I am always buying, like a Tesla or Palantir, regardless of the market situation. So how do we know when this Christmas sale is coming? That's a really important question. Let me show you. So how do you figure out this moment? When is this Christmas sale coming? Well, you have to be a detective, and a good one. You have to come and look at a crime scene and basically examine everything. Look at what the witnesses are saying. Who's credible? Who's not? Who has motives to lie? Who doesn't? What is the circumstance telling you? Everything has to be examined for you to make the best estimate of what the hell is going on this crime scene. Of course, you might be wrong. I might be wrong. I've been wrong multiple times before. But this is a method that most often than not actually works. So basically, look at it this way. The first thing we have as an indicator is the Federal Reserve basically saying, well, we're going to have minimal interest rate hikes, and then they came back and they fixed their version. Well, it's not going to be as minimal. So right there and then, we know there's a credibility issue with this witness. This witness/suspect has now changed their story within just a couple of months. And in our time, let's say a couple of minutes. So we came to the scene, they told us something else about the interest rates. Now they're changing the story a little bit. I'm already a little bit suspicious of the Fed. Now, the second thing is, well, who has incentive/motive to lie? And in this scenario, of course, you understand who has the motive to not be truthful about what they're about to do. The Fed is trying not to spook the market. The politicians want you to just chill and try to keep it quiet as possible. So we know they do have an incentive/motive not to let you know how bad it's going to be. And of course, you have to look at the evidence in the room. Now, the evidence in the room is the CPI numbers and what the mathematics are saying about it. Now, the CPI numbers are at about 6.8% as of November, probably about 7% at this point already. And we do have mathematical evidence of how much interest rates we should see at a 7% inflation. So, of course, me, Tom, the hypothetical detective, are looking at the scene and saying, well, this doesn't add up. What I'm seeing on the floor doesn't add up with what the Fed is telling me what's going on. Plus, the Fed has a credibility issue. So I'm thinking there should be something more here. They're not telling me everything they know. Now, the real question here, of course, is what does the market think? Of course, we can clearly deduct that the Fed is definitely not telling us everything they need to tell us about what the interest rates eventually will be. They're currently guiding to about 1%, 0.9% by the end of 2022. That's not going to be enough. Obviously, I made a whole video explaining why. Look at the tail rule. It is basically an explanation of how you should calculate interest rates in inflation times to stop inflation. Just in a short summary, if you want kind of a rule of thumb, quick calculation, it's about 1.5x. But of course, it's a very complicated formula. But it's definitely not 0.9% when you have a 7% inflation. Now, the question is this already priced into the market? I don't think so, because just looking this morning, Goldman Sachs just came out with a paper saying, well, there's going to be 4 interest rate hikes just in 2022. But when you read the report, they're basically guiding to under 1% by the end of 2022. So it's basically the market consensus. So when I look at all of this evidence, I'm basically saying, well, the Fed is not being honest. The market is not pricing it in because they'll have to raise interest beyond 1% this year. So that creates an opportunity for a massive pullback, which would allow that Christmas moment for you to buy growth at a cheaper price. Now, for that to happen, you do need to understand that there's a lot of assumptions that you have to make here. Don't just end the video here. We have a really important part coming up. Check this out. Because knowing the timing is not going to be enough. You still have to, A, make the right decision. If you buy a shitty company, it's not going to help you the fact that it's discounted. A company that's trash is still trash, whether it's discounted or not discounted. It's like a bad sweater. Don't want to buy it. Now, the second thing is you want to be able to understand when the supply chain issues will be solved, because the supply chain issues in this case is basically a lighter fluid being poured onto this fire. Until you stop this pouring of lighter fluid, you can't put out the fire. So the question is when the supply chain issues will be eased. And in our case, you have to assume it has to happen in the second half of 2022. And change number 3 has to be an increasing competition in the market. If we keep consolidating, if we keep creating these non-competitive markets in the US, there's going to be a very tough time to get these guys to lower their prices, because that's essentially what we need to happen. Now, the only way to do it is to break apart all these monopolies and completely go and create this competitive environment where competition is going to help deflation by creating more price pressure downwards. Now, that, of course, in itself, it's not an easy thing to do. And as you should know, the antitrust authority in the US has not been the best at doing that. But they have to start thinking of ways to completely create this competitive environment, because that's the only thing that can contribute to this price pushing downwards. Now, you also have to assume that the US has to create GDP growth in the second half of 2022, and a significant one, because if they raise interest rates, their own debt, the US government has debt it has to service. The debt becomes way more expensive. And unless the GDP goes up, and as a result, the tax income goes up, they can't pay for that, and they'll have to just print more money to pay for, servicing that debt, essentially increasing inflationary pressures. If you print more money, basically this means jack shit. Now, you do also have to understand that for this whole thing to work, you also have to assume that by the second half of 2022, the pandemic is going to become an endemic, and we'll all learn to live with it instead of battling and basically going into lockdowns and all of this thing. So you do have to understand that the assumptions here are not easy, but probable. Because if you don't assume these 5 factors, essentially you're betting against the US economy. Now, beyond the fact that means you're a douchebag, it's also a foolish bet. I mean, this is still the strongest and the best economy in the world, and betting against it, that's not a very good bet. So if you do that, good luck to you. I'm not. I'm going to bet that this thing actually works out. But I'm going to wait for the price to go down to a level where I can get it for the Christmas sale, not jump the gun right now. Now, I hope this was helpful. Let me know below. If you want to support the channel, $5 per month. The link is below. Join our Patreon, join our Zoom calls, the Discord, and all that good stuff. We'll see you tomorrow.